Hey all, welcome to ShareTreck. This is Raj here, and today we are looking at a fear and greed index that has been consistently improving. Maybe there might be a move back towards extreme fear as we start seeing that the tariff negotiations are not moving as fast as one would have expected. And if you look at the CNBC and Bloomberg as well as Reuters headlines, these are the headlines that kind of appeal to me, and it kind of builds a story that says that people were becoming a bit optimistic. And right now, they are not sure what to do. And we have a slew of economic data coming this week. And personally, I am not going to look much on the economic data because it is backward looking. And we have to look forward because that's where the price is going, especially this week. There are going to be a bunch of Mag 5 companies also reporting. Google did report earlier. Some of them give forward guidance, some of them don't. But then there are companies in service sector and other areas which always give forward guidance. They are also reporting this week. So I would look forward to see what they are looking at in the market. Are they pessimistic? And here are a few headlines that I have for you. It says stock futures are flat as investors brace for busy earnings week. Stock futures have been a bit negative. They have been fluctuating very close to being around zero to negative while I was doing this work to prepare this dashboard. So I would say that the stock market is not yet bearish, but they are waiting to see what happens when the markets start. And Chinese factories are stopping production and looking for new markets as US tariffs bite. So this would indicate that the inflow of Chinese goods into US has stopped. And as I mentioned in my earlier video, which was a deep dive into shipping data, I had said around mid of May, we will start seeing the impact of tariffs in the retail market on the shelves for customers in terms of higher prices and lack of choice or lack of products. Those things will start appearing in varying degrees for different kind of products, depending on who is selling them. Like mom and pop stores who are not able to stock too many at once will be the first to show shortage, whereas the big box stores which can afford to front load a whole lot of inventory, put it into huge warehouses, they will be able to take advantage of the tariff because they can sell the price, the goods they bought at lower price, add the costs of extra warehousing and extra admin fees plus a little more margin and put it out there and still be able to make a good profit. So I think this particular episode is going to kill a lot of mom and pop stores and to make the box stores much stronger. So that's what I'm thinking. We'll see all these things play out in the month of May. Trump-China tariff set to unleash supply jolt on US economy. So this is exactly what I had spoken about in the shipping video. If you have not seen that, please check it out. More people fund groceries with buy now, pay later loans, and more pay those bills late, survey says. Now, this is poll data, and I have this, I've seen this video of Scott Bessent. He was asked specifically, and he said, I don't pay attention to poll data, I'm looking at hard data. But the way I'm looking at it is that the hard data that you get is backward looking, poll data is forward looking. And when you look at 3 or 4 forward-looking data pieces and news articles, you get a picture. They validate each other, right? So I am thinking that we already are seeing lesser employment, which will probably reflect when we see the April employment data, but that won't come until May. So we'll be too late for that. So I've been proactively bearish for quite a while the market is still bullish. So I have some bad positions with shorts on FNGD, but my dollar cost averaging on Mag 5 is working very well for me at this point of time, and my holdings of Berkshire has paid off very well. It's been as good as gold, I would say. So look at these kind of anecdotal information, which kind of says that the economy is not that great. So if the economy is not that great, and if employment starts falling and delinquency start raising, what will the Fed do? The Fed will probably come in and reduce interest rates. And that will be again another bullish catalyst for the markets. Now, plane tickets are getting cheaper as domestic travel demand weakens. What does this mean? That people are stopping domestic travel. Probably they're going by bus. I don't know because I don't have any anecdotal data about that. But if plane tickets are getting cheaper, we can reasonably expect that the volumes of travel is going down. And if the volumes of travel is going down, it's going to hit service sectors like hotels, resorts, and also coffee chains and other things, because that's what happens when travel reduces. And the risk of global economic recession surges on US tariff shockwaves. This is something I think I picked up from Reuters. And there is also another news item from CNBC, which says China rolls out employment support plans, more stimulus as US tensions escalate. China has a population of 1.3 or 1.4 billion people. And if it gives more stimulus and rolls out employment support, it can convert export markets into domestic, and domestic consumers can start buying more at a cheaper rate because these companies have got inventory which was designed for US but which didn't go. So it can be sold at a discount. So they can stimulate their economy. That's what I am thinking. And I don't think they're coming to the negotiating table anytime soon. Countries are pivoting away from the US amid Trump policies. This again indicates possibility of Canada, EU, Australia getting together and doing more business with each other and with China. So those kind of possibilities are higher. AI data center boom isn't going bust, but the pause is trending at big tech companies. So earlier I had picked up a cue that there are some companies which have frozen their data center budgets, and they are not renewing certain contracts. And I was a bit bearish on NVDA, but what we are seeing out here is that everything is just a pause, and it will restart again, and probably it will restart once this tariff issues are sorted out. And I don't think the tariff issues are going to be sorted out without a political upheaval. And we are seeing all of that unfold. And the longer it takes, the worse it will be for the US economy. That's the way I'm looking at it. Having said that, let us just go into the economic calendar. Jobs data is one big information we'll get. That's going to be on 29th of April 2025, which is a Tuesday. And then we have got the GDP growth rate, advanced estimates. This will be important for us to see. And then we have core PCE, personal income, and personal spending. These are all backward looking again, based on actual data from the previous month. I don't think the impact of tariffs are yet going to be reflected on these. Also, I think we have a 90 days countdown. I have to check the calendar and come out with a date when the 90-day countdown for tariff exemptions expires. I think that is going to be somewhere around 8th of July or something like that. That date will be very important, because as we start going closer to that date, the market optimism is going to reduce if we do not see signed agreements. And it's so difficult to sign all these agreements that I would say that there will be more or less a press release from both countries saying that they have a mutual understanding and they have come to broad outlines for the deal, and that their teams are working it out, and it will be signed before July 8 or something like that. That's what I expect to hear. If we don't get those kind of communication, I'm going to be very bearish. And now I'm going to go into the technical analysis aspect. Let us go to the futures. And as you can see, futures are very mildly negative. They are nicely poised for S&P 500. It's exactly poised on this diagonal line of resistance. And I'm thinking if we break through this resistance, then I would say S&P 500 is very bullish. And I will be very suspicious about it, because we have this tariff mess going on. And we also have Trump flip-flopping on Russia-Ukraine war. And I think overall, I'm not getting a comfort feel that we are worth this kind of a bullish optimism. But we see what we see here in the charts. And it indicates that we have a lot of bullishness out here. MACD is very bullish. Momentum is above average, albeit flat. But we are fighting against this diagonal line of resistance, which I think is almost the second last line of defense. The last line of defense for the bears is going to be 5641. And I'm thinking that if we break out above this, then we are clearly creating a new bull channel. Until we break out of 5639.50, we'll still remain in the bearish context. But this is indicating too much of exuberance, in my opinion, contrary to the ground reality that's unfolding. I don't know why it's happening, but that's the way I'm feeling. If you guys think that I'm missing something and that the market is seeing, put it in the comment section, please, because that will help me unravel this contradiction that I see here. NASDAQ also is just below this heavy area of supply. And I think we are struggling exactly where we ended yesterday, and we are down 0.08% in pre-market trades. If we break into this, I think our last resistance is going to be today, somewhere around 19,865.50. And if we break through that, I would say that we are most likely going to be bullish for NASDAQ as well. Dollar index shows that dollar index is still below 1, and the dollar index is up 0.1%. It started higher today, but it has gone down a little bit, but it's still above the 99.274 support line. So that's going to be the support for today. And the 10-year yield is up 0.33% again today. So if you look at the dollar index plus the 10-year yield together, it kind of gives a feeling that sell the US market activity is still going on underneath, and maybe it will pick up. Today is going to be probably the inflection point, I suppose, when everybody comes into trade after the weekend and we see how their collective sentiment reflects. Next, let's go on to NVDA. NVDA is down 1.5% in pre-market trades. It's exactly on top of this heavy supply zone, which ends at 109.38. We are at 109.33. We are also at the threshold of breaking this and going up. If we go up, then the resistance is going to be 113.96 for today. And if we go down, the support is going to be at 106.13 today. So that's the way I am looking at NVIDIA for today. MACD is bullish. Momentum is also above average. So I think NVIDIA is viable to keep on going up further, especially with the news that data center issues are only a pause and not a stop. So that's going to be a little bit of positive catalyst for NVIDIA today. Meta is up 1.38% in pre-market trades. Our support is going to be the resistance from Friday, which was at 549.77. So I'm going to mark that as the first support for today. The second support for today is going to be 516.76. And the resistance for today is going to be 580.99 for Meta. MACD is bullish, but momentum has not yet gone above average. Google is up 0.33% in pre-market trades. Our support from yesterday, which was at 164.59, has now become a resistance. And that's going to play the role of the resistance for today, 164.49. And if we break through this resistance, then our next resistance is going to be this diagonal line of resistance. It's a dynamic resistance at 168.75, followed by a resistance at 169.26, which is the horizontal line of resistance. So these are the resistances for today. And our support for today is a dynamic line of support, this diagonal line, which was the resistance for a previous bear channel at 161.11. That's going to be our line of support. Our MACD and bullish and momentum are both very bullish. So Google is looking bullish overall, but we'll see what happens when the market opens and when everybody comes into trade. I have been a very bearish person for quite a while now, and starting to doubt myself when I look at these technicals. But I'm going to stay with my bearish convictions because that's based on forward-looking poll data. Amazon is up 0.52% in pre-market trades. Resistance today is 191.96. Support today is 184.46. Apple was up 0.44% on Friday. It's up 0.29 in pre-market trades. Our support is going to be 207.21, which I'm marking green. And our resistance for today is going to be 219.01. And if you look at Microsoft is down 0.16% in the pre-market action. And our support is at 387.18. I'm going to mark this as a support out here, and the resistance for today is 400.42. And then let's go on to Tesla. It's up 1.45% in pre-market trades. Its support is going to be out here at 268.91. That's going to be the support for 267.91. It's going to be the support for today. And in terms of resistance, let me draw out a resistance. I had cleared this chart earlier to create some room. and make it much more clear. And our resistance is going to be, just fine tuning this. This is a resistance for us today. And the other resistance I would see is going to be somewhere out here. I would say we would have another resistance at 298.40. So that's our resistance, and support is going to be at 268.83 for Tesla. Oracle is down 0.09% in pre-market trades. Support is going to be 135.93. Resistance is going to be 143.01. And then we are looking at AMD, which is down 0.98% in pre-market trades. And our resistance at 96.13 is going to play the role of a resistance again today, because we are at 95.70. So the first resistance is 95.94. This line, this red line out here, 95.94 is going to be our first line of resistance. And our support for today is going to be this diagonal line of support at 87.67. That's what I'm seeing for AMD today. SMCI is down 0.22% in pre-market trades. Support is at 34.55. Resistance is at 42.85. That's the range for SMCI. Broadcom is down 1.01% in pre-market trades. Our support is going to be 186.00. Let me mark that green. And our resistance is going to be at 198.55. Palantir, again, a very strong stock, is up 0.55% in pre-market trades. Our support is going to be 101.68. And our resistance is 125.15. I think in case of Palantir, I must confess that my political bias has come into play both with Palantir and Tesla, and I have lost a lot of opportunity, especially with Palantir, and I made a loss, especially with Tesla. So I'm going to try and keep my political bias aside. And looking at the geopolitical tensions, I think that I would like to do a little bit of investment in Palantir, but I'm going to do it on the Canadian side, because denominated in hedged Canadian dollars, those Canadian depository receipts kind of make it easy for me, even if the US dollar has got weakness. So that's what I'm going to do with Palantir going forward. SMH is down 0.67% in pre-market trades. And I think the support continues to be around 201.23, and the resistance continues to be 219.21, which is a minor line of resistance. I'm using orange color to denote minor line of resistances. And Tempus AI is down 0.38% in pre-market trades, and for it today, the support is going to be 52.23. And the resistance continues to be 59.30. So that's what I have for Tempus. For Celsius Holdings, I can see that it's on a bull channel. It's already met our reverse head and shoulders targets. So what is next for Celsius? I think I bought up Celsius today basically because it shows bearish divergence. I'm going to just show you the bearish divergence out here. So this is the bearish divergence. I think the action has already started on bearish divergence. And if we fall below this diagonal line of support out here, then our support is going to be 35.80. So that's what I have for Celsius. Having said that, I'm heartened to see that FNGD is slightly positive in the morning. I hope it prevails. Then I can kind of unwind from my FNGD. Last year, if you recollect, I was into FNGU for a very long period of time, almost 8 months, because I did not use it temporarily. I forgot to get out immediately, taking a stop loss. I don't put stop loss because my trading platform doesn't have that. And I haven't yet understood how to do it in my trading platform. So I'm going to put more time on learning about stop loss, how to put it in my trading platform. But FNGD, I should have done a stop loss immediately, but I didn't do that. So I'm down big time on FNGD. I'm stopping to do the dollar cost averaging on that. I'm just going to leave it as it is. But as I mentioned earlier, my dollar cost averaging on MAC5 is working well. So I'm going to hold on. And as soon as I get out of FNGD without losses, possibly with profit, when this market turns around, I'm going to be very careful with those. And by that time, I would have called up my help desk at my trading platform to understand how I can put a stop loss so that in future, if I deal with FNGB and FNGD, it will be mandatory for me to put a stop loss out there so that I don't get stuck in situations like this. But overall, I have booked a lot of profits this year. I'm okay. And with that, my friends, I'd like to just have a quick look at our chat platform and see if there are any chats. Tesla bounce lol. That's what Hot Dog is saying. Yes, I hear you, Hot Dog. Yeah, so if there is any text or something that you want to look at, a ticker symbol, something that you want to look at, I can do that now. Or else I'm going off for my breakfast and I'll come back to do some more trading and try to see if I can do some profitable shorting today if the market continues to be bearish. Thanks, Hot Dog. Yeah, I think I put a lot of efforts on the shipping video. I looked at a lot of B-reels to put through in that, and I worked on the script for almost 2 hours. And I also did a lot of retakes because, as you know, Hot Dog, I'm not a professional broadcaster. So my voice modulation and the pace of delivery and all those things need a lot of work. So I put a lot of work, and many of our subscribers who have not yet seen it, I think many have not seen it, should have a look at it. I'm working on more such features because that's the way I think I would be able to improve the quality of programming in our channel. And many genomic viewers are looking for in-depth videos on individual companies rather than technical analysis. I know that, but I have not been able to put much efforts there. So I'm going to put some more efforts out there. I'm learning this skill. And thanks for your support. And also thanks to Inf. He's in flight. He's on transit. So you and Inf, as well as David, all three of you give me a lot of support. Much appreciated. Thanks for hanging on. And with that, I would like to end this video here. Thanks and have a great day. Bye for now.